a big proponent of keep it simple because I find that's the biggest hurdle is for people on the financial side. If they don't have the means or they're intimidated, that they'll just throw their hands up and say, I don't want to do anything. I'm not going to look at it. That's not where my strength is. But
Mhm.
I believe what we preach is you can take 30 minutes a month looking at the financials and really find some valuable insights to help drive the business. If you're not looking at the financials, you're kind of going along on a ship without a rudder, in my opinion, because
Mhm.
you can't respond to the changing conditions that'll be happening from a week to week basis, month to month basis.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Let me tell you a little bit about my guest today. Kyle Smith, CPA, is a dedicated champion of small and medium-sized businesses. Beginning his career in Austin, he honed his skills as an accountant and controller for various bar and restaurant groups. Kyle's journey continued at Scale Factor, where he advised clients across diverse industries. His ultimate ambition was fulfilled when he became a co-partner at Strata Cloud Accountants, where he provides top-tier advisory and CFO services. Strata Cloud Accountants was founded on shared principles, focusing on family and freedom to grant financial independence to clients and foster a healthy work-life family balance for their team. You can learn from this expertise in creating financial independence and achieving a balanced approach to business and personal life. So, Kyle, welcome to the show.
Hey, Candy, excited to be here.
Thank you for joining me today. Before I get into questions I have for you on today's topic, I would love for you just to share your story of how you became an entrepreneur.
Sure. Well, I think it started maybe like a lot of people with a family entrepreneurial itch. My dad worked in Brinker International, which is the company that owns Chili's, for many years.
Okay.
And he split off and started his own chain of restaurants, franchisee, I should say. I thought it would be a great opportunity because I was in school at the time and I was scared to get a real job. To be honest,
Mhm.
I didn't know what I was going to do. So I thought it would be a great opportunity to join him. And at the same time, I thought I would also be a professional poker player. So I
Okay.
was I was moonlighting as a professional poker player and then working for my dad in the restaurants on the financial side because that was my background. I went to the Macomb School at University of Texas, business school there, and realized two things when I was doing both of those jobs, quote unquote, is playing poker. When I win, someone else has to lose, and when I lose, somebody wins. It's a zero-sum game or a negative-sum game,
Mhm.
and I didn't want that to be the rest of my career. So I decided that wasn't going to be the path for me, and at the same time, it was really rewarding to kind of provide that value on the financial side with my dad's businesses. So ultimately, that opportunity didn't work out like we'd planned or we'd hoped. So from there, I worked with various restaurant groups and bars and CPG companies here in Austin, Texas as a controller, and then went to work for a company called Scale Factor here in Austin that was trying to build software for all sorts of industries on the accounting side. And so I got a 2-year crash course. I got to see all different types of industries because before that I'd been mostly in bars and restaurants and consumer packaged goods. So I got to see how different businesses work, what's important, what to focus on, because I'm part of the implementation team and we would see 30 to 40 new businesses every week. So that was an awesome experience, a lot of really good insight into different types of businesses and different industries. Me and two other partners, Hunter and Diet here on our team, decided to create Strata because we were interested in providing the best service to our clients and where Scale Factor was providing a software. So
Mhm.
split off and started with a small group of clients, focusing on just that, delivering the best service. And that was in 2020, and we've grown from there with that mantra.
Nice. Well, a lot of people who start businesses, are just doing the day to day. They are, trying to make sure that they have, money in the bank and, they can pay their bills, but they don't really monitor finances that much, right? And so I would love for you first to talk about maybe what should they be monitoring? How do they measure what they're supposed to be monitoring to help those independent business owners who don't necessarily have someone on staff who could help them so they know what they should be looking at?
Yes, I'm a big proponent of keep it simple because I find that's the biggest hurdle is for people on the financial side. If they don't have the means or they're intimidated, that they'll just throw their hands up and say, I don't want to do anything. I'm not going to look at it. That's not where my strength is. But
Hmm.
I believe what we preach is you can take 30 minutes a month looking at the financials and really find some valuable insights to help drive the business. If you're not looking at the financials, you're kind of going along on a ship without a rudder, in my opinion, because
Hmm.
you can't respond to the changing conditions that'll be happening from a week to week basis, month to month basis, quarter to quarter. The first thing I would say is definitely have a nuts and bolts accounting system in place like a QuickBooks because it's very affordable compared to what you would get. And if you don't want to hire a bookkeeper, which I would recommend, but I understand, a lot of people can't hire a bookkeeper part-time or full-time or reach out to a company like us that offers that service. If you're doing it yourself, just keep up with it and do the best you can. So don't get overwhelmed and don't worry about the past necessarily. Focus on where you are and going forward, and then look at your financials on a monthly basis. So if you're doing the nuts and bolts bookkeeping at the end of the month, look at the financials, and it might be something as simple as we had $200,000 of revenue, or we had $40,000 of revenue, whatever it is, but I'm not showing any revenue when I run a profit and loss statement in QuickBooks. Why is that?
Hmm.
And you can
Right.
go back and start solving that question. Maybe you can ask somebody on a forum. QuickBooks has an amazing, expertise forum where you can ask those questions. But that starts answering questions, and it can start with just revenue. We preach
Hmm.
5 KPIs. When people get scared of that word, KPI, what it just means is a measurable, a key performance indicator. And the 5 KPIs that we look at are all on the profit and loss statement, and they're all very straightforward. And revenue is one of them. So it's not, you don't have to go from 0 to looking at 300 different metrics on the financial side. Just start with revenue, looking at that every month, and maybe net income on the bottom line, because you can start answering those type of questions that help drive the business forward.
Hmm. Well, do you want to elaborate on, more of those key performance indicators that really they should be monitoring? Obviously, revenue is important,
Sure.
and it's not always just top line revenue too, right? It's what you're at, have at the bottom line. But you mentioned you have 5, that you look at on the P&L, and I know this could be different for different businesses, but maybe what are some of the typical ones that businesses really should be looking at?
Sure. So, revenue at the first part, we talked about it, but as a quick example, worked with a client where we worked with them to project a certain budget for the first month. And when we got to the end of the first month, they were $40,000 below where they thought they were going to be on the revenue side. And they're a session-based business, meaning the sessions that their employees do with clients, that drives the revenue. And so understanding that's the driver of the revenue was critical, because then we could dig in and go, they went person by person and said, what did we expect and what are we actually doing? And they found out that each one of the employees was doing about 4 to 5 sessions less per week than they had thought or projected. So just with that knowledge right there, on the operational side, they can go to their employees and say, here's what we expect. And if we're not hitting it, let's look at why, and let's do it on a weekly basis instead of getting a quarter down the line and not
Hmm.
understanding why revenue is lower. And then on the financial side, we could go and do some analysis and say, hey, at 4 sessions less per week per person, are you still breaking even? Or where is the break
Hmm.
even point? So they've got a lot more information then to make decisions about the business and know, hey, are we going to get into a cash situation down the line because we're lower than that break even point that we set? So just looking at
Hmm.
revenue can start answering a lot of those questions. But another big one that we look at is a gross profit percentage. And for anyone that doesn't know, that's basically your revenue minus your direct costs as a percentage of sales. And not to get too technical, but the reason that we take that as a percentage of sales, an example is I work with a restaurant group, and they had a their cost of sales went up by 5 points. So let's say it was at 25 as an example, it went up to 30% of their sales. That's a
Mm,
big number for them. When the
yes.
profit at a restaurant is 10% or less, it's a tight margin business. That's a really critical area and a big cost center for them. And so normally if you see that on a P&L, you're not going to necessarily know why. Is it because of theft? Is it because costs went up? Is it because the recipe is not right, or somebody who's the head chef is not executing the recipe consistently? And in this case, we were able to determine that it was not theft. It was an input cost that had went up 5x over the last 3 months.
Oh, wow.
Yeah, there was a supply shock, which I had never seen something go up fivefold in that. I've never seen anything go up fivefold, and I certainly haven't seen it go up in 3 months. And so
Hmm.
they were able to then pull some levers on their side. So they adjusted the recipe. The owner is obsessed with quality, so he couldn't just, offset that entire cost increase, because that would have changed the flavor of the recipe. But they were able to make some tweaks to the recipe that were subtle enough, and then adjust on the cost side to recoup most of that shock during the 3 to 6 months that it was happening. And that was saving them 5 figures per month. So that's
Hmm.
another huge one we look at, because if we're chopping down the biggest tree first and then going down the line, gross profit involves all of your biggest revenue and cost centers. And so that's a huge one we look at as well.
Hmm. Well, and do you want to talk about really what goes into that too? Obviously, if you're selling a product, it's the cost of the product as well. But a lot of people look, at only like the cost of what they're buying as materials, and they don't always look at labor or maybe the utilities that it takes to actually create the product. So do you want to maybe talk about what really should be in the cost of goods versus just general overhead?
Yeah, great point. So on the accounting speak, basically your big variable costs go into gross profit, meaning hourly labor is a huge one. Like you said, if you have a hybrid business like a restaurant or a services business, that's one that it's technically in restaurant speak is prime cost, but you could call it above the line gross profit. You want your direct materials, so that'd be ingredients as keeping the restaurant example, and then your hourly labor, because that's dependent on sales. If you've got more
Hmm.
sales, you're going to need more servers, you're going to need more cooks. It's not one to one, but you're looking at that because the more sales you do, it's completely dependent, compared to salary labor would be overhead, because it doesn't
Hmm.
matter if you do 100,000 a month or 300,000 a month, your salary load or headcount is going to be the same. So we are really adamant. That's one of the first things we do is, hey, let's go in and start separating out the variable costs from the fixed costs and make sure that we have an accurate margin. When I say margin, an accurate gross profit percentage that has the right costs in it, because then we can start making those determinations. And as a practical example, if you had your salary included in your gross profit line, you would be getting some really weird numbers, and you wouldn't be able to take action on that necessarily. Because if your sales went up one month, they spiked, your gross profit's going to look really, really good because you've got a lot of salary labor in there that didn't change, and all of a sudden you're going to look really, really profitable, compared to if you had a low month, your salary labor is not, or your gross profit's not going to look very good because you've got that salary labor in there. If you move it out, you can see how good is your team at controlling to sales volume. So are they doing a good job of controlling costs as sales are going up? You'll be able to answer that question if you just have your variable costs like hourly labor in gross profit.
Hmm.
And same on the other side, are they doing a good job if sales are going down? So that's why it's super important to keep those costs separate.
Right. And obviously, if you're using an accounting software, then some of these reports can easily be generated, but sometimes you have to like dig a little deeper or, maybe do some additional reporting. So do you want to talk about like how these can actually be tracked and then, make those changes through the reporting that's created?
Sure. If you're using QuickBooks, and let me know if I'm not answering the question, but so in the example where you've got your so if we run a P&L for a client and we see that their gross profit's way lower than it should be, the first thing we're going to go in and look at is the general ledger. So if you run a profit and loss report, there's on all cloud-based softwares, when you run a profit and loss report under the reporting section of the software, there's going to be a hyperlink to any one of the GL categories. And that's really powerful tool. And that hasn't always been the case. And 30 years ago, you wouldn't have that ability. But now any business owner,
Mhm.
if you have QuickBooks or Xero or another cloud-based software, you can go in and dig into the GL any line. So we could click on it and you could go in and see, okay, they've got all of their payroll in this line instead of just hourly payroll. So then what you can do is create a new category called hourly payroll and make sure that if you're entering payroll in the future, you're separating out hourly payroll from salary payroll. And you could take the next step if you're using a program that syncs to the QuickBooks like Gusto. You can set all of your mappings in Gusto. So you can set down to the employee, is this an employee hourly or salary? And then you can link that general ledger account to QuickBooks. So every time that payroll's processed, all of the people are going to the right spot on the P&L. And on a summary view, when you run it, now you're going to know that everything is accurate. And so you've just addressed your labor issue by digging in and then separating out those costs on the back end. It seems pretty complicated, but with things like Gusto, it's actually not bad, and they have good support to help troubleshoot. I think it's very worth it to try to sync a payroll as an example to your accounting system. Because of that
Mhm.
reason, you can get really good readouts of where you're going.
Right. Well, and we are, for our own clients, we're a payroll company and a bookkeeping company too. So a lot of people don't even want to touch it, so we help them and we can categorize things based on how they like to. So,
Yeah,
but definitely when you can get the information that you need and make those adjustments, I think that's the main point, is really knowing that you could dig deeper into, it's not just a number on a P&L, but you can really like dig deeper to find what is driving, those numbers and make those changes, right? So you could improve your profitability.
absolutely. And I love to work with folks like you, Candy, because then all of that work that I would be having to do, basically, 'cause
Right.
the funnest part of my job is looking at an accurate P&L that I know is accurate, that's book kept correctly, payroll is correct, and we can start making decisions together with the business owner on how we move the business forward. And then we can start looking at cash flow
Mhm.
and all the other things that flow from accurate bookkeeping. If you don't have it, like I
Right.
said, you're running without a rudder on your ship. But if you do, you can really make some powerful decisions for the business really quickly.
Right. Well, and we are talking like finance overall too. And I know a lot of our listeners are sole proprietors where, the business flows into the personal and they're dependent upon having, the business support them. So do you want to maybe touch on how can the business owners really align like the personal goals they have for like income that they need, as well as the business objectives that they have for their own company? And what do you, teach them on how to align those two?
Yeah. So first thing is just a PSA, I guess, because it happens a lot. If you're a lot, we have worked with a lot of business owners that go from not profitable to very profitable quickly. Worked for many years to get the business profitable, and then the hockey stick effect kicks in, and all of a sudden they're very profitable. And if that's the case, remember to reach out to your CFO or a fractional CFO or bookkeeper or your tax CPA, and let them know, because then you're going to want to make sure that you're set on the tax side for withholdings, starting
Mhm.
quarterly payments. I don't file taxes. I'm not a tax expert, but I know that that one will burn you every time. So try to get ahead of it. All that money that you're making, you don't get to keep all of it, unfortunately. So
Mhm.
that's the first thing I would say. And then on the goal front, for us, it's really important. If your personal goal, as an example, I want to I want to 1.5x the business next year, or I want 50% growth next year. So if I ask one of the business owners, what's your goal? And they'll say that, then to me, does that match with your personal goal? Because your personal goal might be, I want to work 30 hours a week instead of 70 hours a week. So
Mhm.
now I've got a red flag of, okay, you want to work half the time, which is very reasonable, and I think is a great idea, but you also want to 1.5x your revenue.
Mhm.
What's it going to take then on the team side to do that? And then we can start answering the questions. Okay, so it's going to take, the sales team is going to need to look like this. You're going to need to have an admin, probably in this case. You might need a GM, a general manager, to come
Mhm.
in, depending on the business, just as an example. And that's going to cost this much. And here's how it's going to affect bottom line. And then we can start making decisions, because they can be like, oh, I don't think that's going to work, or yeah, I'll sacrifice on profitability in terms of a percentage, because if I can get that sales number, the dollars will still be higher, and I'll still be able to take a step back on the business hour side and hit my goal there. So if you don't answer the personal question along with the business question, then there may not be the passion to, because 1.5, if you grow 50%, that might take an extra 20 hours a week of work for someone who's running a
Right.
sole proprietor. Do you want to do that? And if you don't, then you're never going to hit that goal because the passion's not going to be there. So making that plan at the front is really important.
Right. That's a great point, because I think a lot of times too, people don't realize really what it does take to, drive that growth. And especially if you're a solo, entrepreneur with no team, it's all on you. So really knowing what those numbers are and what is it going to take is really important to be able to analyze as well, and that's probably another KPI maybe they can monitor is, how much revenue is coming from the number of hours that I'm even putting in.
Absolutely.
And monitoring that, right? So there's so many different ones that really business owners can look at. But I think one thing people overlook a lot of times too is looking at cash flow. A lot of times they're worried about profit, so I would love for you to talk about cash flow modeling. Why is it crucial to the financial health of the small business? And, what would you tell the entrepreneur on how to really create that process so they can monitor that?
Sure. And I was going to say one more thing, because I just thought of it while you were asking, going back to that question on goals, because it's relevant to me. If you think that you can handle that, there's going to be no cost to more work every week, you should definitely rethink it. So if you're thinking, hey, I know what it's going to take to 50% growth in my business, it's going to take an extra 15 hours a week, and I can handle that. There is a cost to that extra 15 hours a week. You can't just add it in to your schedule. So there is a mental cost to it as well. And it's really important, I think, for entrepreneurs to realize that you can't just keep expanding your hours more and more and more and more and more and more without there being a cost. So it's really important to think about that, I think personally, because I've lived it personally. But
Good point.
yeah, to answer your question, that's one of the funnest things that we do is we don't just make budgets and forecasts, which show you on a profit and loss statement how you're going to do. We make a three-way forecast, which means we'll expand that out to the balance sheet, and then most importantly to month-to-month cash flow projections. So if a business comes to us, for example, and says, hey, we financed this, we used outside investors to finance something before, and now we can look and say, hey, you might be in a position where you could self-finance with a loan this time around and be able to keep money in the business. It's going to affect your cash this much, and we can actually, in a lot of cases, we can model it out month by month, and we can have like a floor set and say if we think we're going to be close to that floor or within a certain amount, maybe we look at an alternate route. But otherwise, they can make a decision, hey, I'm comfortable with this amount that's going to be in my bank, or we have an outlet. So a little bit of cash in addition to just a budget is huge, because then you can start making real decisions on, okay, I also want to take this much out of the business every year. That's a big one. And we can model that out and say, here's probably how much you can take, with making sure that you have enough working capital in the business from month to month where you're not going to get in trouble and have to take a loan back to the business or do something like that.
And do you recommend like how much cash they should really have in the bank too as reserves in case something comes up that they weren't expecting, or an opportunity arises maybe that they want to pursue?
Absolutely. And I will say, paradoxically, the more profitable the business and stable the business, the less cash that you need to have on hand, because you've got a stable, profitable business. The less profitable, the more we recommend, because you have to, or seasonal, for instance, you have to keep that cash on hand if you're going through negative months. And that's usually tough, because the businesses that aren't making profit you're usually in a tougher spot, but it requires more cash. So that's something that we can address with like a line of credit, or trying to get ahead of that. So if we know that there's a big seasonal period coming up, is there levers that we can pull, like the landlord, to set up a percentage rent, or can we get a line of credit in place to have it ready for the slower time? But yes, as a stock, we usually recommend 3 months of expenses on hand. That is wide. That's a wide, rough estimate that a lot of businesses might need more, and a lot of businesses need less, because they're very profitable month to month. They may be service based, and they know that that revenue is very steady. So it depends, but that's where we start from usually.
Mhm. Perfect. Well, I know this has been informative and we're coming close to the end of the time that we have together. So I wanted to ask if you have an offer that you would like to share with our listeners. And if they have additional questions or they want to connect with you, how can they contact you?
Sure. Our website is stratacloudaccountants.com. And we have a lot of information there on how we can be valuable and how we help and have helped many business owners. But we have a special landing page for your listeners, Candy, and it is stratacloudaccountants.com/biz, B-I-Z. And we have the 5 KPIs. I mentioned a couple of them, but we have a 5 KPIs worksheet that's downloadable there. And basically you can, with instructions, and you can work through 30 minutes, like I said at the beginning, take 30 minutes next time with your financials, work through and ask questions just as a start. So definitely practice what we preach. And once again, that's stratacloudaccountants.com/biz.
Perfect. Well, thank you, Kyle, for being a guest on my show. I really appreciate your having this discussion with me today.
Absolutely. It was a pleasure, Candy.
And to the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.